Investors are becoming increasingly cautious heading into the EU summit, while expectations remain low for a resolution. Analysts are allowed to release their opinions on the Facebook IPO today, and results are mixed. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. This morning, U.S. stock futures are pointing to a flat open, but interestingly, European stocks are up today as they head into the EU summit tomorrow.
And I think you can't read too far into that. Maybe it's some shorts covering because something can come out. I know all the hopes are being diminished that nothing's going to come out of the EU summit, but who knows? Maybe they surprise someone. And also, I think they've been down 4 or 5 of the last sessions, so a little bounce back is no big deal. You know, as far as our markets, I know we just had a big pullback from 1360 last Wednesday into 1310. So we're actually pausing here also. So it's going to be very important to see, what's the next direction here.
How do you set up trades going into today, Scott?
I think a lot of guys try to be long versus that 1310 area. If you look at the chart, you will see that, this is quite a pullback. If you sold into strength here at 1360, which made sense, which lined up with the neckline of this head and shoulders top, you then had the luxury to try and rebuy back into big support. If you remember, I remember 2 weeks ago, we kept talking about how this 1306 to 1309 was holding. So yesterday it held. So you have a nice 2-day floor to trade against. We're going sideways here. It's going to be very important though to see what goes on. Can we break back above what will be now a small descending little trend line here? Because right now this potent day from Thursday is controlling the trade. So in order to relieve some pressure here, I think the market's got to get above, just say 1327 to 1333 in order to get back more towards neutral. But you have some decent stocks that are acting well every time the market does want to have a little bit of a bid.
One stock that will be in focus today will be Facebook. Today, the underwriters came out with their opinions on the stock after being in the quiet period. Of course, JP Morgan and Goldman Sachs had the highest price targets there.
Right, so maybe they want to, get the most commissions, or who knows. The fact of the matter is you don't trade based on what these guys say anymore. I think their timing is always off, and there's always opportunity well before. If you watch this show, you go to Real Money Pro, you know that we were talking about Facebook when it reversed back here on the chart. This was, we tried it once here and it didn't work. Here was your entry at 25.75. If you missed this, this is when we got very bullish on it, when it closed above this lower pivot, 28.10. And since then, it's had a nice move. So I know that everyone's going to be talking about it all day on CNBC with the 36 price target, the 38, and then I think JP Morgan and Goldman are right around here. Oh, look at that, a quinky dink, right where it opened. But anyway, I think it's acting better. I think if you're long, constructive-wise, it should hold above 31.55. Let's see how they sell the news or sell the event. And if they don't and it goes sideways, then perhaps we'll get another tradable move above this 33.50, for higher prices.
In the sector spotlight, we're going to talk about the home builders because housing. We've had a great week for housing. On Monday, new home sales came out and reached a 2-year high. Yesterday, Case-Shiller Price Index indicated the prices increased for the first time since September. The home builders have certainly been one of the better performing groups so far this year, but they're still down 10% from their early May highs. Where do you think this can go from here?
I think we want to see it continue to lead. And if there's any hope of a third or fourth quarter rally in the markets, the home building stocks have to act well. And as far as the data coming out, finally, there's some good data, and it's pretty consistent. We know that the U.S. data softened a little bit with jobs and some other key reports that came out. So you want to see housing stay strong. I know I just bought a house. I just sold an apartment. So there is movement, within this sector. And if you look at the XHB, you'll see, it's pulled it off the highs, but nothing drastic. Look at the move that it's had. It's been very methodical. I do see, a downtrend here that is controlling it for now. So I would say as far as the group's concerned, watch the home builders ETF where you can even be long it. As long as it stays above 19, I think it's showing relative strength. And at some point later this year, if it starts getting back above 2060 or 21 and starts breaking this, you'll see some better action in the overall market.
One bright spot in the group has been Lennar. They're up 39% so far this year. They reported earnings this morning, which beat estimates. I think this stock is indicating up this morning. But what about the chart? Can it go higher?
Well, if it's indicating up on the report, what you want to do is you want to see it hold higher. You don't want to see them sell the up opening, because if they sell the up opening, they're probably going to sell other stocks within the group and say they came out with good earnings and it can't hold the, the gap. it's a sell the news type of scenario. And if you look at the chart to me is pretty constructive. It's above all the moving averages, which I like to see, shows institutional interest. And it just broke above this descending little trend line yesterday. It's not extended, it's not near the high, so it wasn't really pricing in anything great. But I'd say as long as it holds above this 28, this is a candidate to make new highs, just like another stock in this group that I think we're going to start mentioning.
I think you're referring to Rylan. Yeah, that stock's been up 44% year to date. It's the strongest of the group. So the question here, though, is do you take some profits or can this continue its upward momentum?
I think it's always good to trade some and trail some, and it's just good to see that there are stocks near new highs. So it shows you that if you're a stock picker and you do your homework and you're in the strongest stocks that technically act best within a group, you can create alpha. And this stock has been acting well all year. If you look at it yesterday, it held higher. You had this nice little pivot, and what did it do? It extended through the highs. So it broke above this 3-month range here, showing you that if you're an investor and you pick the right stocks, you can be rewarded. And yes, it does happen. So this stock is acting very well. It's coming into a little bit of a more macro resistance area. So I do think the next target for this thing will be closer to the 26 area. But overall, it's acting well. It's showing leadership, and it just shows you that you can pick stocks, and there are better, better things to stay with versus another one we're about to talk about.
KB Homes, they're going to come out with earnings on Friday. Last quarter, they missed estimates. They had a decline in orders, which was kind of company specific, related to their mortgage originator closing their business. They had to find a new person. But this stock now, while it's up 24% year to date, it has not been able to reclaim the ground that it lost after that quarterly earning report.
Well, what's good here is that you see something like KBH, performing well. It's being rewarded for its good performance. Then you look over here, you look at this stock, you'll see. Actually, I'm sorry, that was what we just talked about.
Rylan.
Yes, it's Hump Day, Wednesday, right?
Yeah.
Anyway, here you go. So this stock was in the penalty box. Got all the way beat up. It's now trying to put in a lower pivot here. I guess for a trade, it hasn't been a great hold. If it starts to get back above 880, you can see some upside movement. So if you weren't caught in this down move, and you're trying to trade it for a new trade for cash flow, above 880, and you could see it go. This is, a laggard in the group. So you see stocks that lead groups and stocks that are laggard in the groups, and just try and stick with the leaders, not the laggards.
Right, exactly. Weyerhaeuser is another way you can play the housing space. It's a timber company with 75% of its assets connected to the housing market. Stephanie Link at Action Alerts Plus likes this name. She started buying the stock in early May. She likes the valuation. It's trading at 30% discount to its net asset value, and it's got a 3% dividend yield. But let's take a look at the chart.
I think in early May, that's when it put in its bottom. So she was looking to buy it on the dip, which as a fundamental investor, that's what they usually do. What I like to look for is stocks that are in motion. So if you look here, you'll see that in early May, if that's when she was buying it, you had a nice little move off the lows. Then you had a double bottom here, which showed that the support held. And it gave you a little bit of a trade as it broke above this pivot point. Had a move, came back, retesting it. It's performing in line with the market. I would say at this point, if you're in there, stay in there. If you're a short-term trader, make sure that it doesn't break back below 20. The last thing you want to do is see it give back this support level. But if it does, then perhaps 1911, holds and it puts in a higher low. So it looks pretty fair to me.
Great. Well, we're going to take a quick commercial break here, and we'll get back into it with some long positions.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
It's been a choppy market out there, we know, but believe it or not, despite the heavy weight that the European headlines are putting on the markets, we are finding some buying opportunities here. We're going to first talk about McDonald's. This is a name Stephanie Link likes, and I think you're going to tell me that this stock has more to prove as it's trading below some of its moving averages. But it has underperformed the market. It's underperformed its competitors. But Stephanie likes the fact that it's got a steady stream of revenues with 80% of its stores franchised and consistent dividend growth.
Well, I think you could always go back to these, after extreme moves to the downside. And if you sold correctly, which what we're trying to teach you here, you always have the luxury of buying back. And if you look at the chart of McDonald's, you will see that, way back when, you had a nice move in October, lasted all the way through December, nice uptrend, and look how it broke it pretty quick. This was a pretty potent down move. Both these days engulfed this entire range. And then what happened here? It retested it, made a lower high. Then since then, it's been basically deteriorating, where you have all sets of lower highs creating this downtrend where it finally broke below 94. So hopefully you use this area to sell, or maybe even when it broke 94. So if you did so, all the way down here at 86, makes some sense to buy. Okay, so you could buy tier 1. I think if you're in tier 1, that's fine. And in order for it to start getting in motion, it's got to break above this mini downtrend here. So at this point, this is what's controlling the stock. I do think, though, at this level, there's definitely value here. You have a bottom, you now have a higher low, and then if you could finally break above this area, maybe start getting back above, 90, 91, you could at least see a retest of these moving averages back to 94, then take some off, and then continue to see if it proves itself that you could trade it off these lows.
In the tech space, Stephanie saw a big pullback in Broadcom on Monday, so she took advantage and bought some of that. She likes the positioning this company has in the 2G and 3G space. They work with some of the key smartphone operators, Apple and Samsung, and they've got synergies coming from their NetLogic acquisition. But what levels do we need to break through here to see really good momentum?
Right now, Broadcom's not really showing momentum. It's just trying to stay in the game. So if you have a long-term approach with Broadcom, then take it small, because if you look here at the chart, you will see that I don't see any relative strength. It hasn't really shown relative strength all year. It tried to break above this 38 and failed. So once you play something for momentum, momentum's not there, you get out of the way. You then had a pullback. It then tried to break above this resistance, because here it was support, turned into resistance, tried to break above and failed. So to me, this is, you have to have a long-term objective. I don't think it's a trading vehicle for traders right now. If anything, they probably were short on this. So if you're going to be long, that's fine, but just make sure that you have a long-term plan. And if you're, if you want to trade versus level here, this 31 is pretty big. If it starts breaking below 31, I think there are more problems ahead.
Kraft was another one yesterday. The stock was down 2.2% on no real news. This is a stock that Stephanie likes because it's a consumer staple play. They've got a 3% dividend yield, and it trades at a discount to its peers. And the real issue here is they're coming up on a split of the company later in the year, and that's where the value will really be realized.
Okay, and so yesterday, no news, just a big potent down day. So yesterday, you kind of don't want to see when the market's up a little bit and you see your stock have a day like this. So if you take a quick look here, you will see, this to me is a pretty potent move. If I was in this, I probably would have got stopped out, but I'm a short-term player. Right here, it broke, closed in the lows. To me, that's showing that somebody sees some type of problems there. But anyway, it's still above some of the moving averages. It's still above support. Next support here comes in around 37. So you just have to have a long-term commitment if you're going to stay with this. As far as my traders, they're probably going to stay away.
How about Amazon? That's one you like. It's up 30% year to date, and this one's really been able to hold the gap up after its last earnings report.
See, now here's a different story. This one, has accumulation. It's following some of the Red Dog rules. Like you said, it stayed above that earnings gap. It's been flagging and going, flagging and going. Every time the market's positive, it participates. If you look at the chart here, you will see even yesterday, market was up. It was the first stock up. It broke above my last little tactical area. If you're long from here, this is when it woke up after the pullback from the earnings. This is your long. You never got stopped out. You have a series of low, higher low, higher low. So this is one of the best acting high beta names that is in vogue or in motion to potentially retest the highs here of 233. As an investor, I like it. And as a trade, it's been creating cash flow.
How about LinkedIn? We saw Facebook, we mentioned earlier. This has been a strong stock. It crossed its 50-day moving average just recently. Why do you like this stock?
I like this one because finally, first of all, they reported 2 good quarters in a row. So that gives institutions a little confidence that they can keep accumulating it. Their metrics are so much cheaper than the metrics that Facebook's valued on, so that it has it going for it as well. It's also, been public for a lot longer, so it's in some of the right hands. Now, I know it got beat up a little bit when Facebook came out, because when Facebook went from 38 to 25, obviously people got a little fearful of holding LinkedIn. So that created an opportunity. If you look at the chart now of LinkedIn, you will see There were two new technical buys. If you remember, first one, this is when Goldman Sachs upgraded it. So this was what we were trading against for a while. Then this was earnings. You never want to see a stock do a doji into earnings, so that was a sell signal. And then once it broke this small little trend line, this is when I probably stopped trading it. This is when I said, you know what, I'm going to get out of the way. And then a lot of guys in my community, once it started to act better, got above 96, like, wow, LinkedIn's acting much better. I said, okay, you can get back into LinkedIn. Now at least you could trade it versus, the 90 area. And since then, it's been acting well, even in the face of a weak market. You now have a flag type pattern. It's above the moving averages. I'm long some, and I think if it could start trading above 107.10, next level doesn't come until above 110, and then you have those earnings high here, which is about 120. So as a new issue, as a new company, typically that's where you find the biggest gainers in their first 5 years, and I think this one has that potential.
Great. Let's move on to some quick hits. We'll start with Walmart. This has been an impressive stock. It's broke through a decade-long range. So how do you trade this one?
Well, hopefully when it broke that decade-long range, that's when you bought it. You bought it at 64. That's when we talked about it on CNBC, and it was my retail stock of the year. And now it's at highs. I think you could hold it. Don't add to it. Don't chase the strength. And try not to short it, because a few guys tried shorting it a few different times, and there's just too much underlying strength. Just sit and hold it, and hopefully it keeps leading the way for some retailers.
Home Depot is another retailer. We talked about the housing market earlier. What are you seeing in that stock?
Home Depot, I haven't looked at in a while, but a lot of guys have been talking about the strength there. So if you look at Home Depot, this was actually 2 years ago, my stock of the year for retail. And look at that. From the last 2 years, it's actually acted pretty damn well. Anyway, fast forward to where we are now. Short term, this is a pretty potent bar. This is a wide range bar that engulfed a whole upper range. So that, to me, would have been somewhat of a sell signal. It hasn't been able to take back half of it, so this bar is still in control here. But after another day or so, if it starts to work its way through, this bar will lose its meaning, and then it could continue. But if it can't take this back and you're uncommitted to Home Depot, you better watch that it doesn't break this little area here of 51.21, because if it does, no reason why it can't test the moving average down to 49.46. So right now, be a little cautious here, because this is a pretty ugly looking candle.
How about DuPont? This one's pretty cheap compared to, it's trading at about 10 times compared to its historical trading multiple of 12 times. But what does the chart show?
Chart shows me. Chart shows me? The chart shows me nothing. Take a look here. DD, it tried to break above this little range here, right? It tried to break above to pow, got engulfed. You don't want to see a breakout failure. Every time you see a breakout failure, usually leads to lower prices. Right now, it's trying to hold the moving average right here. If you're long it and you're short term and you don't have any commitment to this thing, trade it versus 48.50. If you just want to love them and leave them, and it breaks that area, it could work its way down to this 46 little number there.
Let's talk about some commodities. Gold. Is there any way you could get long this?
Not yet. I think if you're in it for the long term, you're still in it. If you're a macro investor, you're probably trading it versus 148.50, and you're probably a little worried. Rightly so, considering that everyone in the world is saying you have to own gold because of lack of faith in currency, the printing press trade, blah, blah, blah. PS, look at GLD. And, it's looking pretty vulnerable here. So at this point, I think you just need to be careful. This was the outside day. Here's your intermediate downtrend. Remember I talked about breakout failures where it tried to break out above it and then failed. Okay, that was on Fed day, so that was a sell signal. Once that happened, you had to get out of the way. I don't care what you were thinking. And then this downtrend has been controlling gold. And last time I got long it was trying to break it. It didn't. Anytime I've tried to cheat and be long before it actually broke this downtrend, I've gotten hurt. And now you have like this little inside range here. So if you want to take a look at the micro range within here, this is it. The low here is 151.21. The high here is 154. I guess if it starts breaking above this, maybe you could have another micro trade to the long side. But if it starts breaking below, people are going to start cheating short. And if it does break this 148, I don't care who you are, whether you're a gold bug, whether you think you have a thesis, that means the market's not confirming it, because look at this move that gold has had. And if it starts breaking below this 148.50, you could see 140 and might even see lower prices. So just take a little care and know your levels.
Oil is another one that the bears have really been in control of.
Yeah, oil right now is below 80. In a normal world, which I kind of feel like we're in a normal world, I wrote about that yesterday, you could probably buy oil and be okay that you'll see higher prices longer term. But in my active short-term world, it seems weak still. Right now you have big support at 75, 76. if we can't get back above 81 to 83 anytime soon, I think that, you know, another down leg comes in the market. Commodities will lead us lower. Oil breaks 75, and then the next big support isn't down to 61, 62. So normal world, 75 holds. If Europe implodes and we have our problems here, you could see low 60s.
Well, those are some of the key levels that we're looking at on the S&P 500 today, the sectors we're looking at, and some long ideas that we like. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.